Is the Bandhan Life iGuarantee Vishwas plan really a truly guaranteed saving solution or just a conservative life insurance policy wrapped in promise? Let us find out the answer to this question through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So, this is a non-linked, non-participating life insurance individual savings plan. Some of the key features of the policy are there are flexible premium payment options to suit your convenience, and there's a lump sum death benefit payout to support your family's financial well-being, and there is also guaranteed maturity benefit to help you achieve your long-term goals. So these are some of the key features of the policy, and there are benefits like death benefit, maturity benefit, and guaranteed additions as well. So some of the advantages are you get to avail a policy loan of up to 80% of the policy's surrender value. Tax benefits may be available as per the prevailing tax laws, and all the benefits offered under the plan are guaranteed. So these are some of the advantages. However, there are some disadvantages as well, like the sum assured is insufficient to provide meaningful financial protection, and despite offering guaranteed benefits, the overall returns are below expectations. So the policy term and premium payment term lacks flexibility, making it less investor friendly. So these are some of the drawbacks that we need to keep in our mind before deciding to invest in this policy. So now, as we have a basic idea about this policy, let us move on to the analysis part of the video, where we are going to conduct an IRR analysis based on the benefit illustration given in the policy brochure to help us make a more informed decision. If you want to know more about certain aspects of the policy in detail, you can refer to the policy brochure as well. So here, for calculation purpose, let us assume that a 35-year-old male buys this policy with a base sum assured of 5 lakhs with a death benefit of 5.25 lakhs. So the policy term is 20 years, the premium payment term is 10 years, and the annual premium is 50,000 rupees. At maturity, the benefit received is 11.40 lakhs, assuming all premiums are paid. So based on the cash flow presented on the screen, the IRR works out to be 5.38% as per the policy's maturity calculator, which is lower than what most debt instruments such as a bank fixed deposit typically offer. For a long-term 20-year commitment, these returns are not compelling. Additionally, the sum assured is far too low to provide adequate financial protection for a family during unforeseen events. Despite offering guaranteed benefits, the combination of low returns and an insufficient sum assured makes this policy an unsuitable option for both life insurance and long-term savings. So now that we know that this policy does not give us a desirable outcome that we need, let us move on to a comparative analysis, where we are going to take up an alternative approach in which we are going to invest in insurance and investments separately instead of combining it under one policy under the Bandhan policy. So here what we are going to do is we are going to take the same parameters or even similar parameters from the previous example for a much more fair comparison. So here, for life cover purpose, we are going to choose a pure term life insurance policy with a sum assured of 5.5 lakhs, costing 5,100 rupees per year for a 20-year term, where the premium payment is for 10 years. So this leaves us with 44,900 rupees each year for investment. So depending on your risk appetite, this amount can be invested in debt or equity options. So in this example, we are going to consider two scenarios for each asset class. You can invest the remaining amount either in a PPF account, which is a debt option, or in an equity mutual fund, which is an equity option. So to comply with the PPF minimum 15-year contribution rule, contributions are adjusted in the final year. The PPF grows to 13.24 lakhs, delivering an IRR of 6.38%. After redemption and applying capital gains tax, the mutual fund investment yields a pre-tax value of 27.40 lakhs and a post-tax value of 24.70 lakhs. The combined post-tax IRR for the term insurance plus equity mutual fund strategy is 10.56%. This split approach not only delivers a significantly higher total value than the Bandhan policy, but also offers greater liquidity. You can redeem your investment whenever needed. Importantly, the returns comfortably beat inflation, which is crucial for long term wealth creation. From this comparison, it is evident that this policy falls short on life cover, returns, and flexibility, making it a less effective choice overall. So, what is the final verdict then? Is investing in the Bandhan Life iGuarantee Vishwas plan worth it or not? This is a traditional life insurance plan that combines life cover with a savings component and promises guaranteed benefits. However, the IRR analysis clearly shows that the returns are not attractive for long term investors. These low returns can weaken your investment strategy and may leave you with an inadequate corpus to meet future financial goals, and it also has a high agent commission. So, moreover, the life cover offered under this plan is insufficient to provide meaningful protection for your family. This makes this policy ineffective on both fronts, insurance and investment. So, instead of committing to a subpar product, it is wiser to channel your savings into more rewarding alternatives. Selecting the right product is the key step that secures your financial future. A diversified investment portfolio is essential for achieving long term goals with confidence. A pure term life insurance policy can significantly reduce your premium outflow, allowing you to invest a larger portion towards wealth creation.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.